Hi, this is Bob McGee, Chief Investment Strategist at WesBanco with a May market update. We start with the labor market, which has shown a notable shift in the narrative. Job growth appears to have picked up from the sluggish pace we saw earlier in the year. We are now seeing hiring run remarkably close to the break-even rate. This is the sweet spot that keeps the unemployment rate steady without overheating. While it's still too early to declare a full-blown momentum shift, the recent payroll report should help to dispel fears that the labor market is in a freefall. Unemployment stayed at 4.3%, combined with steady jobless claims. For the Federal Reserve, this is a sit-tight moment. They now have the luxury of time to see if higher energy prices will eventually bleed through into core inflation. On the global front, the economy has proven far more resilient to the Strait of Hormuz disruptions than many feared. We're seeing a shock absorber effect at work. Oil prices have risen less than expected. Physical shortages are being offset by demand adjustments, and a wave of artificial intelligence-driven investment is providing a much-needed cushion for global growth. Inflation remains elevated as the Consumer Price Index rose 3.8% over the last year through April. This was heavily driven by higher energy prices. Equity markets have largely discounted this, focusing instead on earnings strength. The key risk is how long gasoline prices stay elevated and whether sustained increases could weigh on consumer spending and broader economic growth. The outlook for interest rates is shifting towards higher for longer. Yields have remained relatively stable, with Fed futures now pricing that the Federal Open Market Committee remains on hold well into next year. Finally, the fundamental strength of U.S. earnings remains the primary driver of stock market optimism. Positive operating leverage is fueling significant surprises. Most major stock market indices have been making new highs fueled by strong first quarter results. With a significant portion of quarterly results now in, realized growth is tracking at an impressive 26% year-over-year increase in earnings, underpinned by a healthy 9% rise in total revenue. For more on what this means for you, please contact your WesBanco representative.